Hey soldiers, we got a very troubling indicator of pressure on the average American, economic pressure on the average American. I think this tells a story of how tight budgets are getting out there. And what people are doing is economically dangerous. So let's talk about this and see what's going on here. With more Americans are actually declining to buy homeowners insurance because the premiums for such insurance is going up. More Americans are declining to buy home insurance due to increasingly expensive premiums, leaving them at considerable risk of losing their home and personal belongings in the event of a disaster. The national average for home insurance based on an annual policy that offers dwelling coverage of up to $250,000 soared 20% this year to $1,428 according to Bankrate. Now listen, that $1,428 is due annually, right? It's not due monthly, but we're seeing where these individuals are having difficulty paying just over $100 per month in order to keep that homeowner's insurance going. Now, most mortgage service providers, so if you have, in fact, I don't know one that doesn't do this because it would be foolhardy for a mortgage service provider to be okay with you, the homeowner, not having insurance on that home. We got storms that are rolling into Florida right now. It is the 29th of August. We hope and pray that those people down in Florida do not sustain damage. We look over in Hawaii and we see what happened in Lahaina to the poor people who, many of whom are still missing, okay? Homes just totally destroyed. So the banks who hold these mortgages, they're saying, look, if something happens to that home while we're holding that note and you don't have insurance, then we lose. We lose our investment. So you having a mortgage, you having homeowners insurance is a condition of the mortgage, all right? And guess what? It's not a good idea for you forget the bank, okay, and their needs. Let's talk about your needs. If you've got a home that you're paying a mortgage on, do you really think if something happens to that home, they're going to say, hey, well, forget about the mortgage. The home is destroyed. I know you didn't have insurance. Let's just call it even. Glad you got out with your life, okay? Good luck to you. No, that's not what's going to happen. All right, so let's see. The national average for home insurance based on the annual policy that offers dwelling coverage of up to $250,000 soared 20% to $1,428 according to Bankrate. That's a little over $100 per month that these people need to pay to keep the insurance up, but they are not able to do it. This is a result of extreme pressure, inflationary pressure on the American consumer, specifically the American homeowner. Can a mortgage company, can they say, okay, you violated terms of your mortgage, we're going to either demand payment in full, or do they have, did you read your entire mortgage document? Do you know? All right, can they do that? The higher premiums, which have been blamed on factors ranging from inflation, spiking the cost of materials and labor, to climate change. Okay, they're going to play that game. I had somebody in the comments on another video, the video where we talked about how the BRICS organization now has 6 out of the top 10 oil producing nations are BRICS members now. I had somebody come in the comments and they went off. First of all, look, I hate it when, take the caps lock off, okay? You know, that's the most juvenile thing. It's just to type in all caps. The person was almost incoherent with dogma, just a climate change devotee. So I tried to tell this person, look, according to NASA, temperatures are also spiking on Jupiter, Mars, and Neptune. Now, unless you can show me a fleet of Chevy Suburbans driving around on Mars, then I think this thing might have something to do with solar energy, because that's the only thing that these four planets, Earth, Mars, Jupiter, and Neptune have in common is the sun, okay? You don't believe in the science. I hate when people say this. Listen, science is not something you believe in. You don't have faith in science, okay? Science, when people say you don't believe in the science, what they're saying is, I don't understand what science is. Because if you did, you'd know that science is continual questioning, okay? The theory of relativity is just that, a theory. It seems to fit in many situations, but not all right? Not at the quantum level. I don't want to go too far down this road, but listen, I like to respond to all the comments. You don't have to put the caps lock on, okay? I'll read your comment anyway. All right, so they're blaming it on climate change. 12% of homeowners are declining to buy insurance. Risky. Because even if you don't have a mortgage on that property and something happens to it and you don't have insurance, then you're on the hook for the total amount of whatever the repair or replacement cost is. And if you don't have that, then, what are you going to do without a roof? All right. At some point, depending on the level of damage to your home, your municipality is going to condemn it if you can't restore it. Of those who don't buy policies, around half have annual household incomes of less than $40,000 per year, according to data cited by the journal. These are people who are saying, look, I got to make a decision. Is it homeowners insurance or is it food? And yes, $160 per month. Yeah, that's a couple of bags of groceries. Just a couple of bags of groceries, especially if you're talking about for a family of more than two. All right. I looked up the average cost of a month's worth of groceries for a family of two in Hawaii. It's over $550. Okay. And they're getting $700 to help them, come back from the fires, right? It's a joke. So these are people, you're seeing the economic fringes start to have real difficulty in making ends meet. Remember, if you're making 40 grand, you don't have access to a big credit line. You don't have access to, a bunch of assets that you can lean in on. All right. A standard homeowner's insurance policy usually covers damage by fire, smoke, theft, vandalism, wind, hail, and lightning. Flood insurance is typically not included in a standard policy. Some homeowners decide to, quote, go bare, unquote, because their insurance provider declined to renew their policy due to an increased risk of inclement weather. Listen, guys, I don't want to get too political here, but Al Gore and Barack Obama, they own oceanfront property. Okay. Now, we've got a schism developing in the country. It looks like the insurance companies are saying, hey, we're going to opt out of insuring properties that are susceptible to climate change, right? But what about the banks who offer these mortgages? I would, whatever you want to think about Gore and Barack Obama politically, fine. But I would argue that they're probably fairly savvy when it comes to their personal economies. So I'm sure they have mortgages on these properties. I'm sure they didn't buy them outright, okay? That messes with your cash flow. And why? When you can get a mortgage at an extremely competitive rate, right? Especially if you're a former president or vice president. So why would banks lend on oceanfront property if climate change is a real threat? Why would banks say, no, the sea level is going to rise, Jack? We don't want to do that. We're not going to put ourselves in that position. Okay. Why would you, as a climate change devotee, Al Gore, want to buy oceanfront property if you believe the sea level is going to rise? Wouldn't you expect Al Gore to live on the top of the highest mountain in America? Okay. Based on his pronouncements. So we've got that schism developing. We see the banks still loaning on properties, but now we're starting to see the insurance companies say, oh, here's another thing that we can, get out of insuring certain properties on: climate change. Okay. Yeah, these hurricane things, they're new. They might keep happening. They've never happened in the history of the planet before, but they're happening now, right? Those who are unable to find an insurer that would agree to cover their property could turn to the FAIR plan. FAIR, or Fair Access to Insurance Requirements, is a state-run program jointly subsidized by taxpayers as well as private insurance companies. The plan lets several companies cover a property under one policy, thereby spreading out the risk. That sounds good. If a homeowner with a FAIR plan needs to file a claim, every insurance company participating would pick up a portion of the loss. Spread it around. Major insurance providers have already left Florida, a state in the path of hurricanes. It's been that way for billions of years. Okay, but whatever. State Farm and Allstate, two of the country's largest insurers, recently announced that they would no longer write new homeowners policies in California due to the increased risk of home damage caused by the spread of wildfires. Farmers, the insurer that has scaled back its business in Florida and California, announced Monday that it was laying off 11% of its workforce, 2,400 employees. Okay, so they're even laying off. That might have more to do with other factors in their business. Between 2019 and 2022, the cost borne by insurers of rebuilding and replacing damaged homes has surged by 55%, while the cost of reinsurance, a type of insurance used by insurers to minimize risk, has risen by between 30 and 40%. This is according to Matthew Carletti, an industry analyst with JMP Securities. So that's inflation is a part of this as well. Inflation is hitting the cost of replacement and restoration in terms of the materials, the labor. Those costs are being borne by the insurance companies, and they in turn are increasing the premiums. And a lot of people are finding themselves in a position where they cannot afford it. If you can't afford your insurance, you need to really look into that FAIR plan or call your state. Because if you own a property, an asset, let's say you own it outright, you don't have a mortgage, and you own it, and something happens to it, think you could lose that asset. You could just lose it. And it could be worth tens, hundreds of thousands of dollars to you. And you could just see it vanish, that wealth vanish, if you don't have insurance. Okay? So look, another pressure that you might be experiencing is the pressure of paying off high interest credit card debt. If you got $10,000 in debt, $10,000 or more, visit mcenow.com/get debt free. We have partnered with Debt America, and we're going to place you with a qualified debt resolution specialist who's going to help you to build a plan and get rid of that debt. All right, so check that out. Now, in the meantime, what I want you to do is I want you to take a look at this video. It's talking about the mortgage danger zone. We just finished talking about the insurance piece of it. Well, there is a new mortgage product out there that ain't all that it's cracked up to be. You need to know everything about it before you jump in. Check out that video, guys. I'll talk to you soon.